James, if China has expanded trade with other countries to replace the US, does it even need the US anymore?
$1 trillion, that's what China is reporting as its trade surplus tonight with the United States. That is a first that it's ever been so big. It tops anything before Trump's massive trade war and his promises to make China pay for it.
Here, starting with a major milestone for the Chinese economy. Its trade surplus has toppled $1 trillion for the first time ever, Brian.
China's customs agency announced Monday that from January to November, the country had exported $1.08 trillion more than it imported, topping what was already an annual record for the entirety of last year. Now, that comes in spite of an ongoing trade war with the U.S.
China's latest trade numbers are in. A staggering $1.08 trillion in trade from January to November 2025. That's right. Just 11 months into the year, China is already dominating global trade. But here's the real story. This trade surplus isn't just about big numbers. It's proof that China has successfully diversified its trade with other countries. Europe, Southeast Asia, Africa, South America. China has expanded its reach in almost every corner of the globe. In fact, in the near future, China may not even need the US market as much as the US needs China. Think about that for a second. Despite being hit with years of tariffs, trade restrictions, and attempts at economic isolation, China is clearly coming out ahead. The trade war might have been intended to slow China down, but the strategy backfired. Instead of weakening China, it forced the country to adapt, innovate, and build a stronger global network. And here's the kicker. China's trade and economic influence isn't just holding steady, it's growing stronger every year. Its global footprint is expanding in technology, green energy, infrastructure, and even consumer goods. So the trade war might have made headlines, but the real story is that China is winning quietly, methodically, and perhaps a little smugly. Let's break it down into 3 main points to see exactly how China turned a trade war into a victory.
The US-China trade drop? Down 28%, but China isn't panicking. Here's the first key point. Trade between the US and China has fallen by 28%. That's a huge drop on paper, and it would normally make headlines screaming, "China is struggling." But here's the truth. China isn't panicking. In fact, it's thriving. Before the trade war, the US was one of China's largest trading partners, making American consumers and businesses a huge part of China's export-driven economy. Then the tariffs hit. Suddenly, millions of dollars worth of goods became more expensive, and some US businesses had to rethink sourcing from China. The expectation? China would slow down, lose revenue, maybe even stumble. Spoiler? It didn't happen. Why? Because China looked beyond the US. Trade with the European Union increased by 15%, while trade with ASEAN countries rose by 8%. These numbers aren't just comforting. They're a clear signal that China is no longer dependent on the US. The global trade landscape is changing, and China is shaping it on its own terms. Take Europe, for example. Europe has been increasingly dependent on China for green energy technology, electric vehicles, and high-tech products. Chinese companies like BYD and NIO are seeing rapid growth in Europe, selling EVs to countries eager to meet climate goals. China is stepping into a market the US seems to be ignoring. Meanwhile, Southeast Asia is becoming more intertwined with China. Countries like Vietnam, Thailand, Malaysia, and Indonesia are participating in trade agreements, infrastructure projects, and supply chain networks that link them directly to China. This isn't just trade, it's influence. While the US focused on tariffs, China was quietly building relationships that will pay off for decades. Even Africa is part of this story. China has invested heavily in infrastructure across the continent, building ports, railways, and power plants. As a result, trade with African nations is rising steadily. This isn't charity, it's strategy. China is ensuring that it has reliable trade partners and a steady flow of resources, while the US struggles to maintain relevance in these regions. So yes, trade with the US fell, but trade with the rest of the world grew. The trade war may have been designed to hurt China, but in reality, it forced China to become smarter and more resilient.
Diversification pays off. China's trade beyond the US. The second major point is diversification. China didn't just replace US trade, it expanded its network globally, making it far more resilient.
If the US thought it could slow China down by targeting American imports, it didn't account for the fact that China was already thinking 10 steps ahead. Let's start with ASEAN. Trade with ASEAN countries increased by 8%, but the impact goes beyond numbers. The Belt and Road Initiative, or BRI, has helped strengthen China's position in the region, creating infrastructure and trade links that make Chinese goods and services more accessible. Roads, ports, railways, and digital infrastructure are not just projects, they're pipelines for trade and influence. China isn't just exporting goods, it's exporting economic power. Then there's Africa. Countries like Kenya, Nigeria, and Ethiopia are seeing massive Chinese investments in infrastructure. This creates opportunities for Chinese exports, from construction equipment to electronics, while also cementing China's influence in strategic regions. And let's be honest, this is a clever move. While the US debates tariffs, China is quietly ensuring that its trade footprint is secure, growing, and global. Europe also plays a key role in diversification. China's 15% trade growth with the EU isn't just numbers, it's strategic positioning. Europe needs technology, clean energy, and advanced manufacturing. China can provide all of this. Meanwhile, Chinese EVs are gaining popularity, with brands like BYD rapidly expanding in Germany, Norway, and other European markets. This isn't just trade, it's China staking a claim in future industries while the US focuses on the past. And don't forget South America. China imports soybeans, iron ore, and oil from Brazil and Argentina. These are critical commodities, and China is ensuring that supply chains remain smooth. By diversifying into emerging markets, China is hedging against political and economic risk. Even if one market slows down, there are plenty of others to keep the economy growing. The big takeaway? China has built a trade empire that no single country, including the US, can easily disrupt. While the US assumed it could slow China with tariffs and threats, China responded by spreading its influence, strengthening ties, and building resilience.
China's economic resilience, growth, technology, and influence. The third point is China's economic strength. Despite the trade war and global uncertainties, China is on track to meet its 5% GDP growth target for 2025. That's impressive, considering the tariffs, geopolitical tensions, and global supply chain challenges. China isn't just surviving, it's thriving. The tech sector is a major reason. Companies like Huawei, Tencent, and Alibaba continue to expand globally despite US restrictions. Chinese innovation in areas like artificial intelligence, telecommunications, and EVs is driving growth. For example, China is not only producing EVs at scale, but exporting them to Europe, Southeast Asia, and even Africa. This positions China as a leader in industries of the future. Renewable energy is another success. China dominates the solar panel market, wind turbine production, and battery technology. Europe and other regions increasingly rely on Chinese green tech, and this trend is accelerating. While the US debates climate policy and supply chains, China is turning innovation into influence. The Belt and Road Initiative also continues to expand China's global footprint. Ports in Pakistan, railways in Kenya, and energy projects across Africa create trade opportunities and strengthen economic ties. China isn't just trading, it's building long-term partnerships that extends its influence. Even domestically, China's economy remains strong. Rising consumption, urbanization, and a growing middle class continue to fuel internal growth. This combination of domestic strength and global strategy ensures China's economy is resilient against shocks, including any potential future trade conflicts. All of this paints a clear picture. The trade war may be over, but China's economic and trade influence is only getting bigger. Its global strategy, diversification, and technological edge position it as the clear winner.
Let's sum it up. First, the trade war has shown that China can thrive even under heavy tariffs. Second, China has successfully diversified its trade, reducing its reliance on the US while building ties with Europe, ASEAN, Africa, and South America. Third, China's economy is resilient and growing, with its tech, renewable energy, and EV sectors expanding its influence globally. In short, China has not just survived the trade war, it has come out stronger, smarter, and more connected to the global economy than ever before. The US may have hoped to slow China down, but the numbers tell a different story. China is winning, and its influence will only continue to grow in the years ahead. The trade war might be over, but the real game, global economic dominance, is just beginning.
China is in the driver's seat, and the US is left wondering how it all went so wrong.